You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, welcome back to everyone's favorite. I hope it's your favorite. It's certainly my favorite bi-weekly source for all things options related. Of course, I'm talking about the old option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. I'm pleased to say I'm back from the epic content palooza that is the Options Industry Conference 2017. Yes, I talked to dozens of people in succession last week. I'm surprised you probably can still hear a little bit of it in my throat, but most things have recovered. I am mostly recovered and back to normal from all that conversing in the high and dry desert air. But interesting stuff at the conference. We'll get into maybe some of the interesting takeaways from that in a little bit. And of course, you can always stay tuned to the network to hear it for yourself. Of course, we have all of the panel audio coming exclusively through us once again here on the Old Options Insider. So this is another example of how we keep on giving to our listeners. We saved you a couple $1,000 for the ticket to the conference, let alone the airfare, the hotel, all the other stuff. You don't have to go down there. Just tune into us. We got all the panels coming for you. In addition, if that's not enough, you got essentially my own mini conference, which is all the people who come through and cycle through of the course over the 3 or so days and come chat with me. They're also chatting with you. So you guys get to hear that as well. Stay tuned to the network. The interviews, of course, will be coming through the interview feed, the panels through the special events feed. They'll also all be filtered through the network feed if you subscribe there, so you can sit back and enjoy all that goodness coming your way in the coming week. I envy you. I've already heard it all, but for you guys, it's new. It's new to you, so I'm excited for you. And, of course, as always, for this fine program, for others, the mothership, the flagship, theoptionsinsider.com is where you can find all the archives. You want to catch up on last year's OIC or the year before, whatever you all got there too, just go to the homepage. You'll see that tab on the top. It says OIC. Click on that. All the archive shows from last couple of, I think last 8 or 9 years, actually. We've been doing it for quite a while, are all there for your listening pleasure. So get at it, check it out, download them, and stay tuned to the new stuff. I think you're going to like it. And, of course, for this fine program, you can always join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, via Mixlr, Mixlr. So you got a question, you got a comment, hit us up. That's the place to do just that. However you listen, after the fact, live, maybe to the interviews. However you listen, make sure you hit us up with those questions, those comments. We do love to hear from you guys, and we'll hit it to a bunch of them today. It is, of course, Mail Block Monday, so you guys get to take front and center. But before we bring you guys front and center, let's bring front and center my other two cohorts, my partners in crime. Let's start off in the pickle capital of the world, St. Charles, Illinois, where I'm joined by Uncle Mike Tussaw from RCM Wealth Advisors. Uncle Mike, welcome back to the program. To you, sir.
Always happy to be here. We're halfway through May.
Craziness. You gotta stop reminding me about the passing of the year, sir. It's freaking me out. This year's is going by way too fast. So instead of more remindings, let's move on to the far hintercoast of Maine, actually, where we are joined by the Rock Lobster himself, Mr. Andrew G. from OptionPit.com, a.k.a. the Rock Lobster. Mr. G, welcome back to the program, sir.
It is a pleasure to be here. I'm glad you made it back safely from yet another trip to a sunny clime where you got to drink beverages with umbrellas in them. I'm happy that you made it back.
You should
It warms my heart.
You should see the volume of work I put in at this show. I've had some people on the network attempt to join me in the past, including Mr. Passarelli and a few others. They all broke and fell by the wayside. They could not handle the sheer volume of content. I've broken many a better man than you, Giovinazzi, at these types of things. So there were no little umbrellas for me. It was just hardcore, cranking out for our listeners. That's what we do here. And speaking of cranking out for our listeners, let's get to it. Start cranking out the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is indeed the portion of the program where we break down what's lighting it up on our own respective tapes, as well as what's moving the market today. And most of the markets ending up a decent up day on the old street. Most of the major indices firmly in the green. S&P up about 0.5%, kind of the leader up there, with the Dow following suit about 0.4%. And then the Qs, ever the laggard today, only up 0.3%. All this green on the screen means red for the old VIX cash. Still north of 10, though, so we're not in the single digits range, right around 10.25. I was pretty darn spot on with my vol views prediction last week. I think I was like 1/10 of a point away. So in terms of VIX prediction, that's might as well be a bullseye. Doesn't get much closer than that. We'll see if we can hang north of the 10 handle. We'll see if my prediction comes to pass again next week. But so far, looking pretty good. A lot of stuff popping off later this week. We'll get to that in a little bit. But first, let's go back to the pickle capital. Uncle Mike, while I was busy out in the desert, you guys were holding court on here. What was catching your eye in this market activity, this maelstrom of activity that's unfolding on this fine Monday, sir?
Well, this is a pretty active day considering what we've had recently, that's for sure. A couple things. First one would be oil. I don't know exactly why there are a lot of different rallies and things going on right now. As they are, I mean, if I were to be a betting man based on some of the news that we had over the weekend, I would have guessed we would have gapped down a little bit. But this is a pretty resilient market. It seems like we get a lot of bad news, and not that this weekend was really awful by any means, but it seems like nothing is making this market go down. Nothing's really making it go up that much either, but maybe it's just the bias spin of the news, who knows? But nothing's necessarily making it go down. So we had a little bit of a rally in oil, but in terms of what that's on, it looks like that's kind of old news. Mark and I talked about that on the show a little bit last week in terms of them cutting production, but we did have a little bit of a rally on oil. That may have jump-started the energy stocks a little bit. XLE was up 53 cents on the day. Also, gold and silver had a little bit of a rally. So silver is actually up a little bit. And and on a side note, I did make a little minor adjustment to my silver collar, but we'll have to wait till Thursday to hear about that. It's really not that exciting, folks. But I do want to say that a minor adjustment has been made on that. Financials had a little bit of a rally, but overall, this was a little bit of a rally kind of day. And that's about it. The fact that we're tinkering and being very close to the all-time highs of the S&P 500. We actually did technically, we were above the all-time highs for a little bit for today, but it looks like we closed below the all-time highs. So with that being said, I think we're at a very key point around the block. We can talk about it a little bit more then, but we might be making some new all-time highs. Or the question is, are we going to do a double top for the highs that were established back on March 1st when President Trump made his State of the Union speech that everyone loved so much? So we'll see where we go. This is going to be an interesting week, one would think, based on the fact that we are right at the all-time highs right now again.
And Mr. Rock Lobster, same question for you. It seems like you are befuddled by today's rally. Why on earth will we rally? How dare you, sir? How dare you ask questions about underlying fundamental mechanics of this market? Don't you know it is impolite to question the bull, sir?
We were discussing this in the chat room. It seems like every day that it seems like there's always smoke from sort of the Twitter news feed about, because there's so much, let's just call it noise around the current administration, but nothing ever really seems to come to fruition. There's this Russian investigation, and it's been kind of 6 months, and they really haven't gotten anything yet. They get rid of the FBI director, nothing really happens. You're talking tough about China, then all of a sudden, we're doing a deal with China. It seems like there's a lot of noise, but then the outcome ends up being not so bad. So I think Vol is adjusting to that. VIX is adjusting to that kind of reaction. So I think the reality is corporate earnings are pretty good. The global picture doesn't look so bad. You've got some emerging market growth. One thing I noticed, we've been talking, just emerging market volatility is as cheap as it's ever been. You want to get long, just buy long-term strangles. In January 2016 cycle, just stuff is just so cheap. You need a buck move in the EM to make money. It's just, there's not, it's just low vol priced in the long term right now is probably the best bargain that you'll see, maybe for the next year or two. It could go a little lower, but for the most part, at least if the bull continues, you're going to make some dough. So all that stuff is pricing very advantageously right now. So do I fight the bull? No. I ride the bull. But as any market watcher, just okay, what's driving the rally? You kind of had the North Korea stuff, and it didn't seem like a great weekend of news. Although, I guess oil rallying now, the market likes. As I recall, the 90s when was the last time that we had that ultra cheap oil? And I mean, the whole stock market literally ignored the oil sector until it recovered, in the early 2000s or whatever. But as of right now, I think the market likes oil prices for whatever reason in this area. So I think that was part of the rally today, that kind of this sort of whoosh relief rally in oil as they try to stabilize oil prices. And we had almost really no markup in VIX. So all of the Comey announcement stuff, all that, let's just call it all the smoke of last week, just at least at the beginning of this week, is just a big poof. It came out to nothing, and here we are looking at a rally once again.
A big poof signifying nothing. I think that's exactly what Shakespeare said, or maybe we're paraphrasing just a little bit. But you're right, it was a lot of noise. A lot of noise at the conference this week as well. I'll try to summarize some of the big salient talking points for you guys here as well. You can, of course, hear it all for yourselves in great detail unfolding this week on the network. But a couple of major trends were at play over there on the conference. Of course, every year people ask how many is too many, which is, of course, there are 15 exchanges now, so it's getting to the point of craziness. But the flip side of that coin was also kind of active this year as well, which is also even though there's more exchanges than ever, there's fewer exchange operators than ever. In fact, this time last year, there were two fewer. There were BATS and ISE, both independent exchange groups. Now, ISE is part of NASDAQ, BATS is part of CBOE. So even though there is proliferation on the venue side, there is consolidation on the exchange ownership side. So it does kind of flip that script a little bit. You have fewer players involved in the options market, even though there are more venues to trade on. A little bit of a paradoxical thing when you think about it, especially when you got NASDAQ sitting on 6, CBOE sitting on 4. You start talking about massive amounts of exchanges just in the handful of exchange groups over there. And of course, the other side of that coin is, of course, the continued concentration of liquidity as well. When we started the Options Insider about a decade ago or so, there's probably 50 to at least maybe 100 names that accounted for, probably close to 100 actually, that accounted for half of the volume in any given day. So your big names that accounted for the lion's share of the activity, and then the rest of the options markets were somewhere in the other 50%. That chart has continued to trend downward. Right now, we're about 20, maybe 22 names total. That's 22 names account for about half of total options volume on any given day. That's the names you probably heard of. So your Apples, your Spies, your Qs, your Googles, your Facebooks, all that kind of stuff, accounting for pretty much half of all the volume that we do every day, which is a little bit disturbing if you look at the long-term trend of that chart, because of course it doesn't take a genius to realize in a few years we're getting down south of 20 and then maybe south of 10 eventually, and then who knows, pretty much all anyone's trading is SPX, VIX, and maybe Apple. CBOE might like that. I don't think anybody else would really be a fan of that, and it's certainly not a trend for a healthy market. So there's a lot of talk about what we can do down there to really help change things around a little bit. Maybe there's a whole bottom 1,000 of the options market that doesn't trade really at all. Maybe a handful of contracts a day. So maybe switching those to an RFQ basis or request for quote, so they're not clogging up. You still, even though they're not trading, listeners, you still have to update them on 15 exchanges every time the underlying ticks. So think about the messaging and bandwidth that is involved to push all those quotes all day long for something that's not even trading. So you start multiplying that times thousands of names out there, and you start to see what all the costs that are hitting all these firms. That's why big firms like IB are getting out of the business. They're being hit with costs. Meanwhile, the profits going down, the risk going up. It's not a long-term viable prospect for any marketplace. So thankfully for the business, they're starting to realize that, and they're trying to try to figure out some ways to fix this liquidity problem, maybe start incentivizing some firms to get back into the space as opposed to getting the heck out of Dodge, like IB announced a few weeks ago or so. So hopefully starting to reverse that trend. But those are some of the big topics of conversation, as well as, of course, all of the ongoing hot buzzword stuff, like how do we get millennials to trade options and things like that. So there's a little bit of that scattered in between. But that's my top-level 10,000-foot rundown of the Options Industry Conference 2017. Mr. Meatball, he's not here. Mr. Rock Lobster, Mr. Uncle Mike, any questions, any surprises that those were the big talks of the town last week?
How do you get an millennial to trade options? That's what I'd be curious about. I think it would be great if they did, but I'd be curious as to what some of the ideas are to spark such a thing.
There's a lot of talk about new types of media, new formats, new ways to reach out to them. VR, and some of these things are obviously kind of pie in the sky, kind of ridiculous. But there's some talk about trying to kind of a thing that has been tried in the past. Seems like there's a renewed push to really simplify the somewhat arcane nature of options terminology, something we talked about a lot here on this program and indeed on the network. Things like front spreads, back spreads, iron condors. These terms are kind of opaque and impenetrable to someone coming to option space for the first time. So rather than doing that, brokers are starting to say, okay, what are you? You bullish? You have this time frame? Oh, you have this much money? Okay, here's what you should do. You buy a call spread, something like that. They try to take it out of their hands a little bit, simplify the process. And we've seen a lot of startups doing stuff like that. You got the trade legs guys, you got Vest, you got the options play guys. A lot of people trying to do that and somewhat automate the process a little bit or simplify the process. So that's one way. I think adding more visual elements has also been good for them. It's adopting new media. It's the same reason we started podcasting a decade ago when really no one had ever heard of it except for some hardcore tech people, was because we wanted to try a new medium to really try to reach out to a new audience. I knew I can get that guy who's 60 years old, $500,000 in the bank, who trades options. I knew I can get that guy. I wanted to get anybody else, so we tried a new medium, and people are still doing that same approach, trying to figure out, how VR could work, or augmented reality, or perhaps Snapchat, or all these other ways of trying to reach the elusive millennial. Even though at the end of the day, for this product, you still need a little bit of income and a little bit of sophistication. That usually doesn't come until you're a little bit higher up the food chain. So that's something I think this industry still needs to wrestle with. But it's interesting to see people grappling with these top-level issues. Any comments or questions, Mr. Rock Lobster, before we move on to the old odd block?
I just think if you want liquidity in the exchanges, you have to start promoting liquidity providers. I mean, the exchanges basically chased out the independent liquidity provider by jacking up all the, they made it so only their top 5 liquidity providing firms, like the Citadels and stuff like that, could be competitive, and everybody got squeezed out because of, you can't compete against computer systems that can, front run everything essentially. Their system was so fast. An order would happen on one floor, and then they'd be and then they would be hitting the markets in other floors and things like that. So, I think, to be honest, the exchanges kind of got what they got by promoting that. They got kind of into an arms race, and now they're stuck with it. And I think they need a way to bring. If you want people to make markets and provide liquidity in those other names, they're going to have to do something to incentivize it. You've had all these stupid payment for order flow things and all these things. None of those really provided liquidity to the marketplace. All they did was sort of shift dollars around from one group to another. So, if you want liquidity. You have to promote risk taking, and maybe they'll figure that out. So as far as that goes, is getting millennials. I think it's like anything. If you make things, we try to educate people. Even the level of stuff that we do, we provide. I think we do a good job of the higher end, or the customer that wants to be more sophisticated, because we require people to do some work. But yeah, if you certainly created products that make it easier to understand, that would help. But you still,
maybe like the binaries.
Yeah, even the binaries, they're still. I mean, ultimately, it's just it's like learning how to use a hand plane. I mean, or you still have to have some level of knowledge of whatever you're using. You just can't get around that. And it's just whether it's going to jump on people's radar screens or not. Usually they go, oh, finance, I'll just give my money and put my money in my 401k, and then I don't care about it. So if they're going to do anything, they have to, make the case for people to understand how to use options. Like, oh, wow, well, you have more control over your, financial future if you understand how to use them. It just, those are the type of things. And yeah, they can make tools to make it easier, but they've got to, that message has to get out there to people. But it still is going to take education. I mean, I even think if it was wildly successful, you'd be lucky to get the top 5% of the investable public trading options. I think that would be monumental, because right now you're probably going to get 1% of people that actually have like an IRA or an account or something like that. So I just think that type of education on how it works, and maybe better tools. And I think you are going to see better tools. I've been trying to work on improving the tools, and as working with retail clients, I forget what I know about options. I thought, oh, somebody that traded a bunch of option contracts, what good is that ever going to be? I'm like, oh, wow, it turns out that actually has some value. So as far as getting people up to some speed where they could where they can use options, I think that should be kind of the focus of the exchanges. And most of the stuff they do is kind of sort of vanilla and wonky. It really doesn't I think the industry in general is not in a problem solving mode. They're in a, this is a call spread mode. And they're not really addressing the types of needs that the audience they're trying to reach has. I just want portfolio protection. I want to know if the SP 500 does this, that I'm going to make something, or I'm going to protect something. Just much simpler, things to really get that part of the investing public in, and then also, push the right type of option contract. I mean, and unfortunately, the exchanges can't do that, because then that would be giving advice, and they can't be into that business. So, the rules part is a little difficult. They're kind of handcuffed by that. I mean, you can't cross the line in education, because it has to be so vanilla, it almost doesn't do any good. This is a butterfly. Well, that tells you absolutely nothing at all about how it's going to help somebody trade or invest or hedge or anything. All the salient points of a fly and why you might want one, and how to create them, and how to actually make money from them, nobody can teach that stuff. That's why, the small firms like us have popped up to do it in this show. And so many of the other shows on the network. So, I think that makes it a challenge. So yeah, I got all kinds of opinions about this, because I've been on three sides of this business. One, creating products, one, as a liquidity provider, owning my own firm as another, and then educating the retail public. And I level from rote beginner to hedge fund manager. So I've seen, what's funny is I've seen what people want, and for the most part, a big part of the industry just does not deliver it. That's the way it is. So that's good for our business, but it's not great for the industry growing as much as it really should. But
Andrew, now you can learn options with VR goggles. Isn't that cool?
Like that. What? It's not going to do anything for anybody.
I will say, though, on that VR front, one of the products you used to rep, actually, and I was talking to your buddy Matt Amerson about this on the show, is actually uniquely suited. You guys are just 10 years ahead of your time for VR goggles, and that is, of course, the Acumen. And that's not for trading so much. It's more for spotting unusual activity. But that thing was at least a decade ahead of its time in terms of options visualization. So that might actually be getting some of the old dust blown off of it and brought back to some of these VR headsets, because that's the hot new thing, sir, visualization. I'm not sure if you're familiar with that.
I am remotely, and I know that that Acumen is still kicking. It's trying, and it is. It was unfortunately it was too far ahead of our time, because you unless you could deliver it through a website easily, the 3D stuff wasn't there, and it was just early. Now that it's kind of kicking on a Bloomberg terminal, where they're obviously it has a shot because they already have that technology figured out. So, well, we'll see. And maybe get famous having a patent for the option of things. So, but other than that, it could happen. I think there are immensely better ways to display and disseminate and describe options movement, options activity, because almost everything we see has come. This is what a liquidity provider used to use, and then just a bunch of liquidity providers. Okay, now we're going to sort of take this idea and move it to the public. So nobody really got over the hump, which we were trying to do at Acumen anyway. We're trying to deliver information, much more usable information, faster, and because you can compare things. You can't compare anything. How do you know buying an Apple option is better than buying a Google option? I mean, how do you compare those two things at once? It's just, so that was the kind of stuff we were trying to do, and it can happen.
It can happen. We can also keep rolling with the show. We can probably talk about this for quite a while, but you'll get a good dose of this week on the network, listeners. So stay tuned. You guys can pick your own poison and check out what panels and interviews you want. In the meantime, though, let's keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, that funky tune means it's time once again for the Odd Block, the portion of the show here where we break down weird, wild, wonderful activity that is coming across our collective tapes. Let's kick things off in a name. I believe this is a newcomer to the Odd Block. Certainly a name I check every morning when I wake up. I have my coffee and maybe open my paper. In the old school days, probably more likely to open up a news app now on my iPad. And then I check a quote on, of course, everyone's favorite, Fairmount Santrol Holdings, ticker symbol FMSA. I know you're with me. You guys all check this one every morning as well. Closing today, a whopping $5.98, up 48 cents, or about almost 9%. So not a bad day for good old FMSA. This is a name that does about 3,300 contracts a day. This gets back to our conversation from last week about do you or do you not like cheapy options? Someone does, 3,300 contracts on a given day. Today, someone likes it a lot, to the tune of 62,000 contracts, about 42-1 calls over puts. That should give you some inkling of what was lighting it up today. And in particular, it was a size vertical in June that was really getting the lion's share of the love out here, starting off with 10,000 of the June 5-6 calls going up for 50 cents. Looks like paper was buying that spread. That went up in one block over there on the Amex. Then as the day went on, more size going up on a bit of a ratio here, about 17,000 total of the 5s and about 31, almost 32,000 of the 6s, which is kind of interesting because that's actually more than is open on this strike. It's about 29,000 open on the 6s and about 28,000 on the 5s. So interesting stuff. There was a size spread sold here back on May 10th. They sold that vertical for 40 cents. So they could be buying it back after this pop, taking that hit on a dime 10,000 times. So there could be some closing paper in there and some opening. There could be weird rolling at work here. A lot of funky stuff going on over here because, like I said, there's some size open on both these strikes and some size paper going up here today as well. Most of this, like I said, on a ratio, not quite 1/2, but kind of close to that level. So interesting stuff. If you're not familiar with FMSA, and really who isn't, this name is on the top tip of everyone's tongue, really. This thing had a bit of a range of late. Got down as low as about $4 about a year ago or so. Actually, briefly broke 4 back in May of last year, and then got as high as looks like about $13 and change back earlier this year in February, and since then it's kind of been on the downswing here, trading about less than half of that now here. So interesting times out here in FMSA. Mr. Rock Lobster, what do you feel on this one? Because it looks like at first like it was probably just closing, but the size volume going up and actually more than the open interest means some new players are afoot out here as well, and the ratio is also kind of weird. So what make you of this strange options tale, sir?
You know what? I look at this and I see it has the smell of closing about it. However, what I found very interesting was, like you pointed out, they traded more June 6s today than the open interest was. So it's a tough one. This is a group I'm looking. This is basically part of all the, like environmentalists, they don't like the frackers, right? But the frackers, you get cheap natural gas, and natural gas is clean, so it's kind of the love-hate relationship. A lot of the fracking supplies like carboceramics and silica, that's another name we've covered. I follow them because it's just one of those industries that if they start fracking again, there's a lot of upside potential for the stocks. Right now, it's just ugly, and it feels like somebody's trying to. This one was a spread cover. It be just because of that other, some of the other volume, but then it looked like there was paper buying extra the June 6 calls. So, I think there's still, at minimum, they're closing a short call spread. It looks like, and usually you close short call spreads because you don't want to get a nasty surprise. And I think balance of the volume, volatility in June is up 7 points. Volatility does not go up 7 points if people are selling tons of options. So to me, it's just there's a bias to buying, and there's a little bit of a pop here. Maybe this, a little pop in oil. There could be a little short covering maybe in some of these names. So that's what it feels like. And it's the bias still to me has to be a little bit call buying net. So I'm going to say they're either covering and or buying more, or two different parties. One's covering at a small owie for a dime, so it doesn't become a big owie, and then they're piling into some other options there. That's what it feels like.
Avoiding the big owies. I like that. Using all the technical terms here on the old Odd Block today. Let's see if we can find a few more big owies here as we dig a little further into the weeds. Coming upon now, a name we've talked about before. This is a frequent offender on the old show. This is Ocwen Financial Corp, ticker symbol OCN, closing today. If the other one was too rich for your blood, don't worry. We got you covered. This one closing today, $2.60. Yes, Mr. Viceroy, if you're listening, cover your ears, please, sir, because I know this deeply offends you to the core. Off about a dime or about 4% today. So this is one of those stock as an option plays. Still doing some paper these days. About 7,000 people live in defiance of the Viceroy every single day. Today, doing about 39,000 and change, about 151 to 1 calls over puts. And looks like the paper here was kind of what Mr. Rock Lobster was advocating, at least in terms of time frame earlier in the show. Not quite so much in terms of strategy. Remember, you were talking about buying long-term Jan Strangles. Our friend here took part of that message. He's going out to Jan, but he's not buying Strangles. He looks like he's actually blasting out some size calls to the tune of the Jan 2018 3 calls, blasting those bad boys out for a pretty healthy 45 cents, all things considered, for a $2.60 stock. They went up in one block on the Amex 20,000 times. This looks like it could be opening, or there is size open interest here, about 45,000. So not many strikes with that much OI open. So could indeed be someone deciding, you know what, I'm getting the heck out of Dodge, in which case probably a bit of a sad face on this trade rather than a happy face. But yeah, again, this thing just has given up the ghost over the last couple of weeks, off about $2. So if someone was loaded up on the old threes and swinging for the fences, then they probably took a nice dent over there in over the past couple of weeks. Looking back at the year that was, this thing has been all over the place, getting as high as about $6 and change back in December of last year, and then, like we mentioned, kind of getting the wings clipped pretty aggressively. About a month ago, a little less than that, about April 20th, coming into earnings, all of a sudden they just got shellacked They opened at $5.50 that day. They closed at $2.12. So not a good day for good old Ocwen, and since then it's kind of been vacillating all over the place, north of 3. Maybe our friend here was swinging for the fences. Looks like those fences got a little bit further away today. Mr. Rock Lobster, how you feeling on this? Do you think this is someone who was chasing those fences and they just got too far? Or do you think this is someone saying, 45 cents for about 6+ months? I can take that yield. That's good dollars.
This is a tough one because it was just $6 or $5. It feels like there was somebody that had some long calls and now they're getting out for 45 cents. Does it make sense to do that? You would have to think the whole thing is toast. Toast.
That would indeed have to be your outlook, I would think, before you're getting back out of Dodge like that.
Both these trades traded on the bid. It was fairly wide market. Both went up on the bid. Didn't say spread. Wasn't marked spread. So if they're getting out, they're getting they got kind of shellacked because, the last time really that, we saw any kind of pricing like this was, right before earnings, there was some substantial, some substantial trade here, but it wasn't on the 3 strike. It was just scattered volume onto the strike. So it's a tough one to figure out from that way on how that all goes. But I'm thinking, it looks like it either is a decent buy right or, not a bad buy right, but it still looks like they're selling calls way out in a $2.60 stock. So that does not thrill me in the least.
But it's good juicy yield, Mr. Rock Lobster. Good juicy yield. People are doing 6 months for a nickel these days. So in that sense, 45 cents on a $2.50 stock, it seems ridiculously, almost ostentatiously rich by comparison. It feels gross even saying it, sir. It's so much income.
Huge money.
Huge dollars. Before we get too lost in the huge dollars, let's move on to our final name, our final victim here. What do we got here? We got Home Depot, a name you guys may have heard of, $157.33 closing today, up about half a buck. Ticker symbol, of course, HD. No, not high def. It's, of course, lumber products and building products and all of that fun stuff. It's the name, as you might expect, does some paper to the tune of about 23,000 contracts a day. Today, doing a little more than that, 125,000, about 1.8 to 1 calls over puts. If you want to find our paper, listeners, don't have to go far. Just go scroll down a little bit to May, in particular, May and June, a little bit of a diagonal here. May 155, a.k.a. 1 double, / June 165, vertical / calendar diagonal there, going up for about $2.97. I went up in 2 blocks on the ARCA. Now, the weird thing about this, what makes it unusual, not just the fact that it's a diagonal, which is interesting in and of itself, not just the size, 6,250 times to start the day for $2.97. As the day went on, a total of about 15,000 went up on the 1 doubles. And how many, let's see exactly, on the 165s, about 15,000 and change there as well. So not just the size, not just the strikes, but also the execution. That was a little bit of a weird one as well. It looks like on the surface that both of these bad boys were blasted away. The May calls actually traded through the bid in some cases, and obviously several blocks went up here at or around the same prices. So this, I don't know, Mr. Rocklop, this is a funky one. Do you think we got perhaps the dreaded time diagonal stupid on our hands here? Oh, and also, others are confused about this. I believe we have a question about this as well. I thought we did. 1 second, let's see if I can pull it up here. It was in the, here it is. They moved it in the notes. Here, this comes from Alec Green versus Red. He says, I'm reading into this. Do you think someone expects an implied vol to drop on earnings with a bias to higher share price on the back month? So this is the funky one, Mr. Rock Lobster. We're kind of scratching our heads. Mr. Green versus Red is scratching our heads. What are you feeling on this Home Depot kind of funky diagonal?
You know what? It is a Home Depot funky diagonal. I was looking for the paper. When I see stuff like this, I got shades of Henry in my back of my head, and I go, okay.
He's lurking out there. The flow mouth check is usually in the chat.
Lurking.
He's lurking just to one-up you all the time, sir.
His whole business is one of lurking.
I should tweet to invoke him and get him to come in and cause some problems for you in the chat room.
I know. Because he always has good stuff. However, I could not. I was just searching for opening paper, and that kind of is the hard part on this one. What opened up that open interest? So it felt like kind of a stupid. I mean, Home Depot's near the top of the range, but do you really want to sell both contracts? I mean, I could see selling the one contract, but selling the more near the money contract in May. We've got earnings in 3 days, I think. Because today's the 15th, so we have earnings tomorrow, so you're still short that May contract. That's a little. Would you do that as an opening trade, selling the May 155 in Home Depot? Because the last earnings cycle, it was, they definitely made a little bit of a move, when 3 or 4 days. So that's what it looks like, kind of a diagonal call, stupid, where people are selling it. It feels like they might be just taking their money and going after a slow buildup of contracts, because we're just trading like 145. Now we're trading around 150, almost 160. It feels like they're just taking their money before the earnings, but that would be my guess. So I mean, there was a buy right on 25,000 contracts. They paid 61 cents for the May doubles. And that was on April 10th. So, again, I would have to see the volume, but it looks like that's the biggest print I can find. Depending on the ratio, they might have done okay on the dollars on there, as long as they didn't sell too much stock against the position. But even then, that's only part of the part of that trade closing. So. It still looked like sell to me, and somebody's with the high open interest, they're just getting out of Dodge. That's what the timing feels like.
I just tweeted for the Flow Master, see if we can drag him up from the ether where he lurks. Meanwhile, let's keep on rolling. It's Monday. It's time for you guys to join us. We've been running off of the mouth for quite a bit. It's time for you guys to join us. It's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Like the man said, this is the portion of the show where you guys take the reins, questions, comments, insights, complaints, all that fun stuff. Maybe some praise as well. We'll take all the above. Hit us up. You know where to find us at Options on StockTwits and Twitter. Questions at the Options Insider if you want to go the old-fashioned route, or just Smoke Signal. That also works out there as well. And a lot of cool stuff on the old front. Let's see what we can find. Let's kick things off. Actually, let's pay off last week's debate/question first. We asked you guys this. We were in VIX limbo time. How low can VIX go? We were debating on the shows last week as well. Looks like a lot of you said this far, no farther. About 9 is the bottom. 43% coming in on that front. 25% saying the other side of the coin completely. But look out below 8 is the next place it's going to stop. So interesting little bit of a schism there. About 17% say no lower than 8.5. About 15% can't get below 8. So a variety of floors factored in there. Agree, disagree, missed it last week, didn't get a chance to vote, hit us up. We'll see what we can do to tally your votes, listeners. And this week we asked you guys, earnings season, still in the teeth of it, still some good names popping off. So what are you watching on your options watch list for this week? We gave you 4 names. We gave you Walmart, of course, WMT, Alibaba, ticker symbol BABA, B-A-B-A. Home Depot, just talked about them, ticker symbol HD. And Uncle Mike, cover your ears. Yes, Cisco, ticker symbol CSCO. Let's start with the aforementioned Uncle Mike, who's probably crying slowly into his beer right now. Uncle Mike, what do you think is winning, and what is your pick if you have one?
Well, I'll say Baba is what I think is winning, and I'll say Cisco. I want to go with, I want to face my fears and face my past issues. I've gone to counseling, and, I think I can work with it now.
I was going to say, it's like immersion therapy for you. It's like if someone's afraid of flying, you put them on an airplane. To you got to get in and just start voting for Cisco and hope the demons go away at night, sir. All right. And so you voted for Baba. Okay. And yourself personally, I think it was Cisco, or maybe the other way around. And Mr. Rock Lobster, what are you feeling, sir? And what do you think people are feeling out there?
I'm going with Tucson on this. I'm going with Tucson.
So you're picking Cisco. You think the people are picking Baba?
Yep.
Interesting. 2 good picks, actually. You guys are correct. The people are picking Baba. They got some Baba love right now, but 52%, with 22%, a distant number 2 for Cisco. So about 3/4 there on those two. And then 17% for Home Depot. Walmart, kind of the trailing name, only about 9%. So I kind of figured Baba would be leading the charge, and that is exactly what the case is. I thought maybe some of the UA for HD of late would pop it up a little bit higher than it is, but c'est la vie. And then Uncle Mike's nemesis lurking in the shadows there, Cisco. Just posted that a few hours ago, so you got all week to vote if you haven't done so already. All right, next up, what do we got? What do we got here? Oh, let's see. Someone commented already on what you were saying before, Mr. Rock Lobster, about the options exchanges have made their own beds by killing the market makers. Now they have to lie in them. I believe that is a direct quote from you, sir. He agrees. So you got a lover out there, you have a friend. This Gary Frya, he says, you have a very valid point, sir. So there you go. Some of your messages ringing home, sir. Have a valid endorsement here from Gary and company.
Yeah, listen to that. Listen to that.
Getting the love. So you're not, I'm sure the hate from the exchanges will follow. At OptionVol, if you want to send him that, their exchange listeners. But getting a little bit of love there, too. So we're trying to balance it out there for you. What else we got here? We got, this is quite the name. I hope if I butcher it, sir, I do apologize. This is Abdallah Badwan. I think I nailed that one. Abdallah Badwan. He says, hey, hello, Abdallah. I'm new to options, but I have been studying them for a while. And the only thing I don't understand is how do I know what stocks to choose if I want short-term gains? In other words, I want to be a short-term investor, and I want to know how to narrow down the stocks I want to invest in on a daily basis. How do I make a watch list of stocks that I can invest in on a daily basis for short-term gains? All right, a lot of interesting things at work here, a lot of interesting grammatical issues too. I'm assuming maybe English is a second language. So he did a lot, yeoman's work here on getting all these thoughts out in one big sentence. Let's start with the last one first, because that's kind of a nice concrete place to start. Watch lists, really easy to do. Most of your brokers should have this very basic functionality built in, which is, hey, these are the names I want to watch. You click plus, or obviously it varies by broker, but you build those and you start watching those names. I use a lot of platforms here on the shows every day, and we talk about a lot. So I think LiveVol is one we use quite a bit. That one is pretty easy to add a name as well. Just type in a ticker symbol, for example. I'm looking at Home Depot right now because we were just talking about it in LiveVol Pro. Type it in. You see next to it, you'll see a button that says Add HD to your watch list. I clicked on that, just did it right now, and bam. HD is now in my watch list. I am watching it. So I could watch it for short-term gains, as you say. So that's an easy way to do it. If you don't understand how your broker does it, or you just want to kind of go your own route, there's a lot of standalone watch list apps. In fact, we just had someone on our Trading Tech Talk show a few months back who's trying to make the simple, humble stock watch list a cool, sexy thing again by adding some new bells and whistles to it. I believe it was called SparkFin. Search for that, SparkFin. It's just an app you download. I think it's mostly iOS. I think it's iOS only right now, but it may be able to add it to other Android and other devices later. And that's kind of what it sounds like. It's a stock watch list with some other bells and whistles added to it. Our folks over there, our friends over there, StockTwits are some of the investors behind that. So it's a simple idea, but add a little bells and whistles to it, and of course you can search for other ones. Bloomberg has them out there, Yahoo. There's a bunch of other. If you just want basic watch list functionality, that's pretty easy. Now let's get into the second parts of this multi-part question. Let's see. He says he wants to be a short-term investor. He wants to know how to narrow down the stocks he wants to watch into, easy for me to say, how to narrow down the stocks he wants to invest in on a daily basis. Well, Mr. Rock Lobster, this sounds like exactly what we do when we are preparing for the odd block. So why don't you walk him through some of the scans that you run in order to highlight maybe some interesting trading candidates out there, sir?
Running through all my scans?
Leave
sharing
out
secrets?
Leave out the virtual reality, of course, because that's hard to replicate. But give him all the rest of your secret sauce for free.
Never. Okay. What I will do is, first off, you have to decide what you want. Do you want stocks that are moving? So you want stocks that are moving more than they normally do. So if you want to buy options, to me, my mind says, okay, if I want to buy an option, I need the underlying to be moving more than it normally does. So that's what the kind of stuff you want to scan for. You want to scan for rising realized vol. That helps. That's one way. Also, sometimes rising realized vol, rising implied volatility. So just a couple of volatility measures helps you. Just if you just want to look for stocks that are moving, that's a way to do it. If you care not for what the company does and you just want a vehicle to ride your option with. So that could be certainly one thing to do. We've set up some scans in LiveVol. And one thing I do for scans, I look at if you see a scan, or if you run any kind of a scan, but then you see a whole industry in the scan, that generally means the market really likes it too much, or could be some momentum, or they all hate it at once, which could be let's say a good put writing candidate or something. Because usually there's a lot of knee-jerkiness with, when the market just decides to not like or to like one industry group at once. So I use scans that way just to get a flavor of what's going on. So those are two quick ideas I have on that subject.
I think that the way with which to do it, I like to look at sectors. I have two watch lists that I look at. One of them are just a few underlyings that I look at, some various indices. I like adding the VIX, the Russell, the SPX, things like that, as well as, Apple has to be on the watch list because Mark always asks me about it, even if I'm not necessarily trading it. But I think that the easiest way of doing it is to really have a following of the indices. And then step two would be to have a following of the sectors, the XLs, for example, XLE, XLF, XLK, and then just kind of get a basic following. And if you see something that's attractive to you in one way or another, if maybe XLK is on a dip or XLE is on a dip, whatever the case may be, then at that point you have just a universe of the entire market, but it's kind of narrowed down into 9 underlyings that you can choose from. And then as time goes by, if that's not enough of a variety for you, then start adding some stocks to it. And then that's how I would do it. And that's my take on it.
And that's all it takes. We got time for right now, so we got to keep on rolling, keep those questions coming. We'll get to more of them on Thursday's show, maybe some other shows throughout the week. You never know where your question may pop up if you don't have time for it on this program. We do read them all, and we try to respond to all of them, sometimes on the show, sometimes privately, depending on the questions. So keep them coming. Meanwhile, though, we got to keep on rolling to our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block. Like the man said, it's the portion of the show where we tell you what we're watching for the rest of this week. An exciting, super exciting week it is. And we still have some earnings on the docket. So if you like to sink your teeth into something nice and micro and easily manageable in terms of the actual numbers and things, not some crazy, ethereal macro development, then we got you covered. You got Tuesday, you got Home Depot, like we were talking about. Wednesday, Target. So if you like the retail, I got some big retailers coming out this week. Thursday, good old Baba and Walmart and the Gap. So if you're hot on the retailers, this is the week for you. Interesting stuff, some other names floating around out there as well. We got John Deere on Friday. We've got Cisco, like I mentioned before. They are after the bell on Wednesday. A lot of names floating around. I think AMAT, Applied Materials, after the bell on Thursday as well. So a few names for you guys to choose from, no matter what you're interested in. Interested in tech, interested in retailers, interested in all sorts of fun stuff. Tractors. We got you something for you out there this week. Aside from these many and varied, easy for me to say. Talking all week last week, still catching up with me here. Still cleaning out the cobwebs. Aside from these many and varied names reporting, Uncle Mike, we'll start with you. What are you watching for the rest of this week, sir?
2,400 on the S&P. Are we going to hold it? Are we going to burn through it? I remember when the Dow was just touching the 20,000 mark back in January. We came so close to it, but then we bounced right, or it came right down, and we didn't go through it for a while. So interested to see if 2,400 is a similar type of scenario with the S&P, and that is the laser focus of the week for me.
Nice and laser focused out there in St. Charles. So focused you could cut a pickle with it. All right, and Mr. Rock Lobster, what are you watching the rest of this week, sir? Any of these earnings popping off in the pit chat?
Yes. We are looking at, I'm trying to see if we get anything out of this Home Depot thing, because it usually is a little bit of a bellwether, but I have to admit, for the most part, it is I think it's just trying to, again, looking at really low vol everywhere else and seeing what we can scoop up. So I think that's probably where the big opportunity is.
There you go. Big opportunities to be found hither and yon in the market for the rest of this week. So says Mr. at Option Vol. All right, listeners, that music means, unfortunately, to come to the end of this grand foray through the world of options. But before we go, let's check back in with my cohorts, my partners in options crime. See what they got cooking that maybe will help you avoid a few crimes of your own. Let's start with you, Mr. Rock Lobster. Let's go back in reverse order around the horn. What's cooking in the land of the pit, sir?
We have our masterclass starting next week. There you go. That's all you need to know. Masterclass selling.
You said
vol.
it wrong. You said the masterclass. You got to say it that way. That's how you sell it, right there.
The masterclass. You got it next week. Kind of a soup to nuts ground up on understanding how to sell options.
Head on over to optionpit.com, listeners, and you too can register for the masterclass. Check it out soon. I'm sure it fills up because it's just fun to say. And when it's fun to say, those things tend to fill up. The masterclass. Mr. Uncle Mike, you got any masterclasses lurking for our listeners out there, sir?
No, man, that's a tough act to follow, I tell you. No, we don't have any master classes. However, we do have the ability to work with a financial advisor who's not afraid of the word theta, nor is he afraid of the word rho. If you're interested in working with a financial advisor, feel free to contact me at 312-212-3531 or shoot me an email at mtosaw@rcmfs.com.
There you go, listeners. That's going to do it here for the old option block today. Like I mentioned at the top of the show, if you're interested in all that OIC stuff, and again, you save thousands of bucks by not going and just listening to us instead. Really easy to do. Stay tuned all week. All that stuff's going to be hitting the network all week. So the interviews as well as the panels. So stay tuned for that. If you want to know where to find it, of course, so we have our Options Insider special events feed. You can follow that. You can follow our Options Insider radio show just for the interviews. You can go to the OIC tab on the homepage there. Just look at the top of the homepage. There's one of the 3 tabs up there. Click on that, and it'll take you all the recordings there. Or it'll all be in the network feed as well. So if you subscribe to the network already, don't worry, you're going to get it all. And if not, you should go do so. It's probably the easiest way to get all of our content. And on behalf of the Rock Lobster and Uncle Mike and D myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing, all the other fun stuff that you do. And we'll see you this Thursday for more of The Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.